Good afternoon. This is Chris Brecher with a Simpler Stocks free video for July 22nd, 2016. As you can see right now, it's about 45 minutes before the close. Basically, today was all about the transports, and we'll get into that in a minute. Right now, we have the ES is down 1350, finally a double-digit loss in there. NASDAQ down 22, Russell down 870. Bonds up a little. They were down a point, had a nice reversal. That actually on the Simpler Stocks premium on the email alerts, I actually said that bonds and gold got down to support. They're probably going to bounce. Crude oil extending its loss down a point. We've actually talked about that since above 48, that it looks to me destined to go to at least 42. Vance declines moderately negative, nothing really awful. Nikkei down 355, but the big deal to me is the transports, down 109. Now, the reason the transports are down today is because of things like Southwest Airlines. Southwest Airlines today getting smoked down here. Really not flying high today. Let's put it this way. I don't feel like any bad puns in here, but it looks really poor. Basically going to where it was on Brexit. Unbelievably at the same price in here. Also, you have another one, a rail. You have UMP looking poor today, down over 2 points, almost 2.77, almost 3 points. Now, the whole reason I'm showing you this is this dragged on to some of the other airlines. So you have UAL, which actually acted well yesterday to lousy news, which I didn't understand, starting to get pounded today. Now, the way this works in here is everybody is watching the transports and the NASDAQ to see if they can catch up with the SPX and the ES. What I mean by this is you have the ES right now at an all-time high by far, all the way up here. On the other hand, you have the NASDAQ and the Dow Jones transports that need to go and play catch-up on here. You have the NASDAQ trying to go to a new high. You have the transports that need to go 1,300 points to get up there. So the whole idea in here is a lot of people thought this the inverse head and shoulders, and they're getting spooked today when you have the transports getting hit. The whole idea is the transports are actually where they were right there, about July 12th. Now, a lot of people are scared that if that's where it was July 12th, does that mean the ESs are going to go where they were July 12th, which is about 2137? Now, I'm not sure about that. All I know is this refused to go to a new high, which spooked a lot of people out. And that's, I think, what dragged the whole market down. Now, another thing in here, and we talk about this all the time on Simpler Stocks on the chat room, is we talk about that the NASDAQ today where traders tried to take it up. So I want you to see this on the left. Think if you're a trader in the NASDAQ pit and you're saying, I want to take the NASDAQ to a new high because everything else is. Well, if you do that, the NASDAQ 100 stocks need to go up too. As you can see in here on the get-go today, the NASDAQ stocks fell apart. The Apples, the Amazons, they all have to go up if the NASDAQ's going to go up. So the whole idea is if the NASDAQ's up, and these stocks are falling apart, if you bought NASDAQ futures, you have to scramble and start to sell them. The whole theory is if you push up the NASDAQ futures, it should push up the stocks. As you see, that did not happen. In fact, see that the second little leg up right there? Look where these stocks were then. Totally fell apart. Led by Apple, Google. Look at that, falling apart today, straight down. You had Netflix getting pounded today. You had Facebook right out of the gate today looking awful. So the whole idea on this is there was no way the NASDAQ could go up if all of these stocks went down. That doesn't mean it can't go up tomorrow. All I'm saying is that was one of the first tells. So number one, you had the NASDAQ stocks looking bad. And you had number one, the transports looking bad. The other thing you had on here was the ESs. The ESs on a 78-minute chart were developing this. Sometimes it's hard to see with all the different trend lines and all that. So the easiest thing is to go in here and put my ATR trailing stop only. This strips off a lot of the different indicators because to me, ATR trailing stop and actually chart patterns mean more. As you can see on here, right here, you have this nice little wedge which we broke to the downside. You can see that we had negative divergence, but like I said, negative divergence is just a warning sign. That's not the biggest thing in the world. The biggest is right here, the breakdown of the wedge in here. Now, the problem with this, if you're a bear, is we're already extremely oversold. Every time we get that oversold, we usually have a vicious bounce. But theoretically, if I'm drawing these lines correctly, right there, because I like the more times I can connect, the better. If I'm right, we could go down by the width of right here. That's about 2165, 2150, about 15 points from 2160 gets us, guess where? Right to support around 2145. So that's what I'm looking for, is that area. I don't think straight down. I think first you probably have to work off the oversold. You have to see how it acts as it works off this oversold. If we go to a new high, well, then all bets are off. But if it does one of these weak little rallies in this area, just so this could get back to the zero line, well, that changes things in there. So very interesting in there that I'm going to be watching closely tomorrow. Last thing I want to show you in there, if you think this can't work, look at the ESs on the right. And on the left, put in the SPX. I want you to realize the SPX in here obviously has a similar pattern. It's not a 24-hour chart, but realize that the 2160, we're talking about this going down about another 10 points. Another 10 points gets hit at 2150, and if you put up the actual option page, you'll see there's a bunch of open interest at 2150. And on summers, when it's this slow, indexes tend to go to their open interest. So definitely keep that 2150 in mind in there. So like I said, we might have an oversold bounce first. I want to see how that acts. So the last thing I want to mention in here is tonight, John Carter's doing a free webinar called Earnings Secrets, Smarter Ways to Trade Binary Events. It's tonight, Thursday, from 6 to 8 p.m. Central, and it's free. So if you get a chance, try to sign up and listen to my boss in here. He has a lot of great stuff, especially for free. So everybody have a great night. I will talk to you tomorrow.